Hello, I'm Stephen Hammond with Christian Values Investing, and today we're going to take a look at Amazon. Should you be holding Amazon in your biblically responsible portfolio? Stay tuned. Today I have with me Grayson Shaw, and we're going to be going over Amazon. And Grayson, Amazon has been a company that has done really, really well over the last 25 years or so. And you know, actually right here, if you take a look at this is a memory card that you could go out locally, and you may not be able to find it, but you know, you can go on Amazon with one click, buy this memory card, and if you have Amazon Prime, they'll probably have it to you the next day or the day after. And so what has happened over the last 20-something years, Amazon has grown very, very large. And Grayson, can you tell us a little bit about Amazon, maybe some of its background and exactly what it's doing right now?
Of course, and Amazon does have a very interesting past. We all are familiar with Jeff Bezos. He's a billionaire, one of the richest people in the world, but he started up Amazon in 1994, and most people know that it was originally an online bookstore. What a lot of people don't know is when they started diversifying, and they don't know about their earliest investors. And one of their earliest investors was Jeff Bezos' own parents, and they put in about $250,000. And it's speculated that that investment and the amount of the company that they got at that point would be worth about $30 billion today. But their holdings haven't been disclosed publicly since 1999, so that's why it's speculated and people don't actually know exactly how much they have. But they started diversifying in 1998. They started getting into music and videos. In 1999, they got into the video game industry. In 2000, they started offering a platform for third-party sellers. And then in 2005, they introduced what we know as Amazon Prime with the free 2-day shipping if you were a member. And it's really crazy when you think about some of these people that got in early and the kinds of returns that they were able to make. Like, for example, as parents, they would have about a 12 million % return on what they originally put in. Some of the venture capitalists that originally invested in Amazon when it was starting in 1995, 1996, they put in 8 million, and they got a pretty nice profit of around 55,000%. And it's incredible to see how much it's grown since 1994, and when it went public in 1997 at $18 a share to what it is today at $1.9 trillion, the fifth largest company in the world.
Grayson, Amazon has grown greatly. You know, we've been watching Amazon for a very, very, very long time. And I hate to be disappointing. We have never been long in Amazon, and you're going to find out why in just a few minutes. But you know, Amazon has been growing its sales growth about 10% every quarter, which is pretty substantial sales growth. So what it does, it gives them money that they can invest, and they can put in different segments, and they can continue to produce new products and continue to grow. So they've been doing very well with that over the years. So let's look at a little bit of the fundamentals of Amazon. Right now, since Jeff Bezos retired in, I believe it was 2021, Amazon started selling off, and it hit about $186 a share in July of 2021, and then by December 26, 2022, it went down to about $81 a share. But right after that, when the market started turning around and things started getting better, it really started growing, and actually hit a new high just a couple of months ago. It got up to a little over $200 a share. And but let's look at a chart for a minute on this company. And you can see on a 5-year chart that this company has grown substantially over the past 5 years. And you see where it's peaked sometime around May of this year. It got around July of this year. It's gotten a little over $200 a share. It's trading today around the 185, 186 range. So the chart on this, a 5-year chart, looks pretty doggone good. So how does the fundamentals look on earnings per share? It's in the top 19% of all companies right now is at earnings growth per share. Is ranked at 81%. The relative strength of Amazon is relatively really weak right now. It's in the top 60%. But you see what has happened since around May or so. The company has got in some selling pressure, and it's basically went down a little bit from where it peaked in July. So it's over the last several months, its relative strength has not been very good compared to the market. But right now, if you look at the sector that it's in the retail internet group, and it's actually ranked number 7. Number 1 in that group is a company out of China called JD.com. But Amazon looks pretty good, and it's been a really good long-term investment for people. But we at Christian Values have not held Amazon, and I'm going to tell you why. So what you'll find out is Amazon supports abortion. It provides financial assistance to its employees to have abortions. Amazon is in the adult entertainment business. They sell books, movies, and other media that contain pornography and other adult entertainment. To Christians, that's really morally objectable. Lifestyle choices. Amazon promotes lifestyle and behaviors that are contrary to Christian values. A lot of their movies, books, this stuff involve drug use, inappropriate sexual behavior, that type stuff. So when you look at it from a Christian perspective, Amazon does not pass our biblical screening. So what happens is we have to reject Amazon, even though it's been a really good company that has made people a lot of money over the last 25 years. As a Christian investor, we cannot invest in Amazon. Grayson, is there anything else that you would like to say about Amazon?
There is, and one of the questions that I have stems from some of the research I was doing looking into what's going on with Amazon right now. And regardless of whether they're biblically responsible or not, I believe that these two things could apply to other companies that we could invest in that do pass our screening. And number one, Amazon's CEO is pushing a return to the office. He's trying to get all of their people back 5 days a week and to their brick and mortar places, their brick and mortar offices. They don't have brick and mortar stores. But also there is a lawsuit out against them that's accusing them of monopolistic tendencies. Is that something that usually will hurt these types of companies? Will we see their stock price plunge as a result of that?
Not really. It may sell off initially a little bit, but really it won't really hurt it long term. Usually when news breaks like this, you may have a short little blip in it, but management has done a good job about creating earnings growth and giving a good return for the investors. So people may sell it off on the short term, but for long-term investors, it's just a blip in the market, and they'll just ride this through.
And do you think it'll hurt them having people come back to the office, or do you think that would help their growth?
No, Amazon has had a history of turning over middle management, that type stuff quite often. So I don't think it will hurt that at all. I think those that are in upper management has been really dedicated about being in the office. It's these middle managers that really like working out of home, and those are the ones that they usually have quite a bit of turnover with those. So I don't think it will hurt them at all.
All right. Well, I think those are the questions that I had. Do you have any closing statements about Amazon and how it relates to other companies that we might or might not buy?
I just wish that Amazon's upper management would really reconsider Christian investors and their values, and turn away from doing things that are contrary to traditional Christian values. And if they did, I think it would open the door for a lot of new investors in the Amazon. But right now, the way Amazon is operating, it would not pass our biblical screens. Therefore, we could not put it in our biblically responsible portfolios. Until next time, God bless you.